Hello class and welcome to our 7th lecture series on financial accounting or principles of accounting, and I'm your instructor Jamal Haider. So after this chapter, which is cash or cash equivalents, when we talk about this, then we would be having our midterm. So I have planned our midterm either on 5th or either on 12th or May. So just gonna give you the overview. We would be having our midterm either on 5th or either on 12th, depending your situation. So please, before next class, do write me in our WeChat group that are you available on either of these dates or not? Okay. So remember, this is the midterm exam, and it constitutes 30% of your overall evaluation. So, and there is no mm, uh, remake of the exam. So either you will attend it or either you will lose this 30%. So please check your time, schedule, and then let me know that either you're comfortable on 5th or available on 5th or not, or on 12th or not. So we need to choose between these two dates. Okay, so our today's chapter is internal control and cash. So what we have learned up till now, we have talked about the cash accounting, accrual accounting. We talked about the how we generalize the entry, what is meant by posting, how we create the income statement, retained earnings statement, balance sheet, right? And now let's talk about the how we account for each item. So we just completed balance sheet, income statement. We talked about heavily on income statement, that is revenue minus expenses, or the multi-step income statement, which is sales minus cost of goods sold is equal to gross profit minus selling and admin expenses, right? So we have covered our income statement. Now this is the time to talk about balance sheet. And balance sheet starts from, so this is the balance sheet. So balance sheet starts from assets, and this is liabilities and owner's equity. So we start from cash, and then we go down, we complete our assets, and then we complete our liabilities, and then we complete our owner's equity, right? So this is the whole course structure right now. So we will be covering all these items. So our today's agenda is we are going to share light on how we account for cash and cash equivalents. So this chapter 4 we will cover in 2 lectures, and after this lecture we will be having our midterm, which will of course we'll be covering from chapter 1 to chapter 4. Okay, so you understand the layout, what will happen and what's going on, right? So we will be covering about each account, how we treat it differently, or how we are going to double check it. So cash is the most sensitive item in any business, hence it is the most sensitive item in accounting as well, because the blood of any organization is called cash, right? Any question you want to ask? Okay, so let's talk about describe fraud and its impact. Let's talk about this. So fraud, because we are dealing with cash, so this is a natural stuff, right? So fraud means intentional misrepresentation of facts or causes injury or damage to another party. It increased with expansion of e-commerce via the internet, right? So common frauds are insurance fraud, credit card frauds, check forgery, identity theft, Medicare fraud. So 2 types of fraud that impact financial statements. So all those fraud, they are not so huge fraud with respect to company. They are fraud. Identity theft fraud, which is not going to cost the company, heavily. Insurance fraud is just going to be one customer who is having insurance fraud, not all the customers, right? Or maybe all the customers or majority of the customer are doing that. We have to deal with that, but that does not impact the company greatly. So if we categorize the fraud, that would be, we categorize based on its financial impact. So there are two categories. Number one is misappropriation of accounts and fraudulent financial reporting. What do we mean by misappropriation of account? Number one, these are committed by employees, which means theft of inventory or money, bribery, kickbacks, or overstatements of the expense reimbursement. For example, company gave you, company allowed you to reimburse your utility bills or your medical expenses or your hotel covering expenses. So you stayed in 3-star hotel, but you make a slip of 7-star hotel and you are reimbursing greater amount. So that is called overstate expense reimbursement. The fraudulent financial reporting, it is committed by managers. For example, false and misleading entries. They make journal entries and that is not backed by physical evidence. Plus, their intention is to deceive investors and creditors. So in your point of view, which one cost the company a lot, which have a definite financial impact on the company? David, which
Yes, sir.
is, cost the company the most?
I feel like the first one, misappropriation of assets.
Okay, Sipade.
Are you thinking in terms of law or like profits?
Financial impact in terms of money. Misha. Junpyo.
Fraudulent financial reporting.
Kim, what do you think? Junpyo? Chloe? Guys, where are you?
I also think the one that is committed by managers.
Okay, well done. Because employees gonna steal inventory, that's not gonna have a huge impact on companies' financial statements. So these are the one who are called, who commit white collar crimes, and their impact is huge because they are the one who are called, I hope you have watched the film The Wolf of Wall Street. So you can see the magnitude of amount that they can do that. So employee cannot steal the inventory of like $2 to $3 million or $5 million or $3 million or $3 billion, but they can do that. Just one entry, they just take out the money and distribute among themselves, number of directors, that's it. So their basically focus is to deceive customers or window shopping, their window dressing. These are 2 or 3 concepts that you will learn in auditing, but just giving you a taste here. So where there is a cash, there is a chance of fraud. So fraud triangle, which means fraud can be triggered by 3 things, either motive, opportunity, or rationalization. So what do we mean by, so what do we mean by motive?
Like what pushes?
Right? So what is the motive behind that? Either you want to, you are disagree.
Get richer.
Right? You want to, it's your habit, fun, or you don't have good ethical manners, right? Opportunity. So there are loopholes in the business or in a company, and only so you try to exploit it. Right? For example, IT manager, he knows that, at this time, no one, in the manager's office, so he can steal some papers and he can make frauds, or he can just maybe blackmail the manager because there are camera installed, only he can access. So this is called the opportunity, right? Motive can be different. Maybe you want to, have to defame someone, or if, companies, you think that, companies is not giving you enough salary, taking you from 9 to 9, 9 to 10, or you are having 14 hours of work, but your salary is not justified. So it's better to, steal something or do some fraud, and you say that it is justified. The third one is rationalization, which means if I don't do that, then somebody else would do that. So why not I do that? Right? You saw that the cash is, it's over there and it is accessible to everyone. Right? Everybody knows that. So it means that is rationalization. If you know that there is a cash over there, and if you don't pick that, definitely somebody else will pick that. And so why you let others to make his day? Why don't you make your own day? Right? So this is called rationalization. So explain the objectives and component of internal control. So in order to prevent fraud, companies exercise internal control. So internal control means they are a primary way to control the fraud and errors. So there are very minor, difference between fraud and error. Fraud is that you are doing intentional, and error means it is human mistake, right? For example, you received cash, $4,000 from a customer. What is the entry? Cash to account receivable, but you write it down 400. If your intention is that you can take 3,500 to your pocket, then that is fraud. But if you deposit all the 4,000 to the bank account, but that is a mistake that you write it down 400 here, it means the balance of account receivable, sorry, 3,600. The balance of account receivable still shows 3,600. And then you make a reverse entry by having a human error stuff. So you can also reverse the entry and you can make that, okay, I made an error, but cash is already deposited. Look at the cash balance. Cash balance will be exceeded by 3,600. But if there is no cash, it means you just took the cash in your pocket and you write it down 400 as an entry. So that is fraud. So internal control basically is implemented to prevent